Everyone, hello and welcome. It's the Wednesday afternoon Drive Home Talking Business webinar, and my name is Glenis Gassmann from More Customers, More Profits. I'm a business strategist, and we're coming live to you from Melbourne today. Thank you for being with us on the drive home. It's the 14th of August. Did I say that? I wasn't sure actually. But joining me tonight, we've got Phil East. So Phil works with mum and dads in Melbourne Riviera area, and he helps them grow their business so that they've got more money to make some lifestyle choices with. So Phil, how are you tonight?
Oh, I'm great, thanks, Glenis. Yes, Victoria's
Riviera. Do you sort of like? I just think oranges. Is that right?
Sorry, I missed that.
I'm thinking oranges. You know, with the Melbourne Riviera country, I'm just thinking lots of luscious oranges and citrus on the trees. Is that what I'm envisaging here?
We're all about the seaside, the beach, a bit of wilderness. Yes.
Okay, got it. Awesome. Thanks for joining us, Phil. And we've also got our special guest tonight, Josie Ludwig from Solpoint. And Josie she works with businesses to provide them with a flexible, scalable accounts team for if you don't have anyone that's looking after your finance needs and accounting needs. So how are you tonight, Josie?
I'm great, thanks, Glenis.
Thanks for joining us. Thanks for joining us. And tonight's topics is numbers. You know, why do you have to focus on your numbers as much as your activity in your business? And when we're talking numbers, we're talking like sales, cost of sales, overheads, and wages. And so before you switch off completely altogether tonight, because numbers is boring to you, I want to actually get to the heart of why numbers are so important. So, you know, why are we doing these drive homes? You know, the drive homes on a Wednesday afternoon is because we want to showcase some experts in their fields. And Josie and Phil are experts in their fields. As you know, business is a big beast, and there's so many parts of it to sort of get a grip on as a small business owner. Keeping your eye on everything really is a mammoth task. So as part of the Referrals Over Breakfast networking group, we want to share all of our knowledge with all the networks around, with people that really know their stuff, and to help you simplify your mission as a small business owner. And that's why we got Josie on board tonight. And for those who know me, you know I'm passionate about numbers. They're not boring to me because I'm a former accountant, you know, and so they're not boring. But what I do now is I work with people primarily on business strategies, but typically that's all about generating leads to generate profits. And when we get a lead in and we create some revenue, then we've got to get some profits in. But along that journey, there's many twists and turns, and it requires us to be on top of our game, because really for every dollar that you get in, you want to be making 15 to 25 cents, or I'll say that a different way. For every $100 you get in, you want to be making somewhere around about $15 to $25 in profit. But there's many reasons why that doesn't happen for a lot of businesses. And so Josie is going to help us tonight sort of uncover and unpack the areas that we should be looking at, the sorts of things that we need to really look after in our business as far as numbers is concerned. So tonight, I'm going to throw over to Josie. And, you know, first question I want to ask you, Josie, is, you know, why did you get involved in numbers and a business with numbers in the first place? So you must be really passionate about this as well, yeah?
Yeah, absolutely. So part of the reason I love numbers is because they actually tell you stories about your business. And getting into numbers, it's logical, and I do like logic, and it gives you really clear measures for what's going on. You know, so even as a creative person, you still need to measure your success somehow. So, and all businesses need to measure their success, and the numbers in your business give you really, really clear indicators of where things are going right and where things are going wrong. And
absolutely. And
it doesn't have to be all boring, you know, wads of spreadsheets worth of numbers all over the place. You know, what you want to do is gear your numbers to talk to you in the best way possible, so that you can, you know, read them in the language that you understand. So Yeah,
you must come across, sorry to interrupt, but you must come across a lot of people who don't even know what a spreadsheet is, right?
Yeah, absolutely. There's a lot of business owners that the numbers side of the business is really just not their cup of tea. And, you know, that's fine. You can get around that quite easily if you just do things the right way. But a lot of things about the spreadsheets and the numbers does intimidate some business owners, and, you know, they're fantastic operators. They've got these amazing, beautiful, awesome business ideas, which those things inspire me as well. And putting those two things together and making sure that that really inspiring business is really propped up for success by making sure that they actually make the money underneath it, then, you know, those two things is what gives me passion and drive to do what I do.
Yeah, look, I totally get it. How many people, like on average, you know, if I call people that are really focused on their numbers, like that's one side and the other side is like just flying by the seat of their pants. Like what's the ratio between people you see about, you know, who really are focused to people just flying by the seat of their pants?
It's probably 50-50. I mean, who knows? Depends on who you meet, I guess. And look, I think all business owners do have some clue that they do need to do something, and they need to really, you know, they do have some idea that it's important, but I think there's a fair bit of head in the sand syndrome when it comes to the numbers and the financial side of their business, because it can be scary,
yes,
and difficult, time consuming, sometimes boring for them because it's not their passion. And so, you know, like putting that together into something that they can use, that gives them the quick snapshot, gives them the information they need. I guess it's finding for those people the strategies to get it in front of their eyes without having to take on necessarily this mammoth task, because it's not something that they're good at or keen on doing.
So how do you do that, Josie? Like that sounds really good. And just before you answer that question, one of the things that I have, you might know, I work with acronyms a bit, and I have an acronym for head in the sand syndrome. It's called the HIT syndrome. And quite a lot of people that I deal with, that I work with, you know, they started off with having hits, but I've given them solutions and, should I say, tablets and pills to actually get rid of that. So, yeah.
Sometimes the hits, Glenis.
What's that, sorry?
Sometimes the hits are not necessarily because they don't understand, but because they might confirm to them what they have a bit of a gut feel they know, and they sort of don't want to have that confirmation. It's like if someone's in a little bit of strife, all of a sudden they don't open their mail, they don't open the bank statements and all that sort of stuff. So
yeah,
maybe just some of those hits might be just a bit of avoidance of stuff they know they need to fix.
Yeah, because, and that's a whole new conversation, but I totally agree with you there, Phil. It's like head in the sand is not because they don't know it, it's because they don't want to know it. You know, things might be on the downturn. But Josie, tell us how you do that for people, because this is very interesting. Yep, and we've got a few people online tonight, and I want to welcome, just before we do that, I want to welcome Anna and Sam. Thanks for being on the line. We've got Joan as well, and Selena. So thank you for joining us tonight. So Josie, yeah.
Yeah, so how we do that, so we obviously, you know, do the boring stuff, get the data into our accounting software, and we use Xero cloud-based accounting software, which is, we just use that one piece of software because we find it's just simpler to be consistent across the board. And that data gets put in various ways with cooperation from the client, or we take on board as much as they want us to. So we try to work with the client to create services where we're covering off on the areas that they really don't want to do, can't do, but potentially sometimes giving them control of areas they should be in control of, and designing that service around what they need and their level of capabilities or requirements.
Yeah.
So that's the first port of call. You know, so, and designing the processes and systems around all of that to make sure things go in consistently, because there's no point in putting data into something, and then when it spits out the other side, it actually comes out in all different places and you actually can't interpret it. So it's about getting it in the right way so that when it comes out, you can read it and it's useful. So designing that for each business is a really key part of making sure you can use the data. And then taking that and making sure we interpret that into reports or different, and not even just the whole big picture report, sometimes breaking down into small manageable pieces. So you might need to just see a particular report on some sales to be able to track and manage that particular thing.
Yeah.
You know, and or you might need to really concentrate on your wage cost, because your wage cost is really key to your success, or your cost, the cost of the
sale,
the product. Yeah. So if you're going to make a product, how much that costs you, you might want to really closely monitor some specific areas. And with that, those reports, we try to create them. We've got several different ways. Sometimes we might do them manually in Excel, but we have got other software that we can bring it into and create more visual reports and give people graphs. With quite good for creating trends and seeing things over a longer period of time, and where you're going to expect, you know, if you're looking back at 12 months and you see dips and troughs in your data, then that obviously translates to potentially in the future you might see dips in those particular places. So it gives you that heads up, well, I might need to do something to lift that dip up. You know, I might need to
come and talk to Glenis and Phil and get a strategy.
That's right. Yeah,
so build that up again. Yeah, absolutely.
Strategy to get my marketing to fill this gap. What's going on here? What's causing that gap? How do I fix that?
Yeah.
So to me, what happens is you present the data and you pull it all together in a certain way that gives you the information on, you know, those things you need to flag and deal with operationally. So it's really translating into, what do I do in my business operationally to fix that problem or prop it up or make it better or whatever it is that I have to do.
Yeah, and you've been very successful in doing that, and because, you know, you've scaled up a great business, and now you have a team of people that really look after specific areas for business owners. Tell us a little bit more about that.
Yeah, so from the outset of my business, I took to making sure that I did my own numbers, did budgets, did business planning, but it wasn't just about creating those, it was really understanding what those numbers were driven by in the first place, and then taking those drivers and measuring them as I went to make sure that I was actually getting to where I wanted to go. And so making sure of those things meant that if it wasn't working, I could then make decisions to change or adapt to those areas. So that's how I did it in my business in terms of the numbers. But also I think just, you know, keeping on top of those things, keeping them up to date, making sure compliance is met, making sure bills are paid and things are under control also gives you the freedom to ensure you're not bogged down in worry and grief over things that are going to bite you in the bottom later, so you can actually concentrate on going out and making sales, going out and developing your business, making, you know, doing those actually really good and excellent things to achieve what you want to achieve. You know, that the last thing you want is to be having to fend off calls from the tax office on overdue debts, or having employees come up to you and say, where's my superannuation? Why haven't you paid it? Because then you get disgruntled employees and their productivity drops. And so there's a whole lot of operational things that then fall off the table and start to crumble when you haven't got that stuff under control.
Yeah, absolutely. It is the foundation and the sounding board of all businesses. You know, you do need to know sales. You've got to know your cost of sales. You've got to know your wages and your overheads. So guys, you know, for all you listening out there tonight, you thought you were going to get away with it. Really, it's just one of those things in business that you got to do. And, you know, if that's not your forte, then, you know, you've got businesses like Josie's who's out there who does look after that. And she even looks after your accounts receivable. So that's people that pay you the money, and they may be a bit late. So tell us a bit about that too, because you do offer that service, yeah?
Yeah, we do. And the approach that we take with accounts receivables, it is the most key area of your business to make sure that your cash flow is working, to make sure that's under control. What business owners don't realize, and I suppose my best tip in terms of making sure that doesn't become a problem, is actually designing your sales and your sales process up front with the client so that it builds their expectations on payment. It creates easy pathways for them to make payment and minimize as many of the roadblocks that you could come across for them for making payments. So we take the receivables and collections, we take the approach of from the very start of the process when the customer comes on with you as a business, how are you managing that? And we help you to design that, help you to make sure you're mitigating as many of the excuses, the problems, the roadblocks as possible before it even gets invoiced.
Yes.
So before you even make the sale you've already got that under control, and the customer's expectation is very clear on what needs to happen. So that's my absolute top tip for, making sure your debtors keep under control. Actually do it, make sure that you've got that plan very clear from the very beginning, and you then back that up with people behind you that can do that arm's length collection. So I guess from my point of view, I never collected my own debts in my own business, because as the salesperson in my business, for instance, the last thing I want to be doing is ruining a relationship by asking for money.
Exactly.
Right? So even though that's my job as our organisation, I get other people to do that within our organisation, because, that's the salesperson's role, is to create good relationships and to, keep that stuff going. But if you're having to play the tough guy with the baseball bat going, pay me the money,
it doesn't work.
A good relationship.
I know that.
So having that arm's length person behind you, backing you up to just say, yep, this has got to be paid, take it out of your hands and make it so that it's just a business arm's length transaction.
Yeah, it's not personal.
You've been told how to get that you need to pay it. That's life. Just pay it, And use, sort of escalation techniques to make sure if you've really got a dodgy customer to get there, that it gets escalated, to the
pretty quickly. Yeah.
The other massively big tip I have in that area is leverage. Do not give away your leverage. So if you are delivering a service, you make sure that if you are not getting paid, that you cease giving that service. There's no point in generating revenue on a client that will not pay you. I've seen stories, had clients where I've had to turn them around, where they just keep providing the services in that they're getting the sale, they're getting the revenue, but they haven't paid for 9 months. It's not really going to, at the end of the day, what's going to happen when you have to write that off? You didn't make that money at all.
Exactly, because it's purely just, it's an invoice, and we all know that cash is king in a business. So, you're right, with any business, you've got to actually have, and I think in the last 10 years, I've seen accounts receivable terms go from 30 days down to 14 days, down to 7 days, almost now to 50% upfront if you want to work with me, and 50% on completion or something along those lines. And that seems to be the norm these days. No more anything over 30 days, just not acceptable. But Phil, I know that you deal with a lot of businesses out there. What's the norm around accounts receivable debtors in your world? And also, I know that there's some questions in the Q&A. And anybody listening tonight, you've got some questions for Josie or for Phil, just pop them up in the Q&A for us, and we're going to take some questions very soon. So Phil, you could take one of those questions as well if you like. But tell us what's your experience out there where you are around all of this accounts receivable, because it can kill a company.
Most definitely. The cash gap, as they call it, is huge. And I think talking to business owners, a lot of it comes down to their own pride, because I think if they have to ask the person who owes them some money for some money, that means that they somehow don't have enough money and they're pleading for a donation or something like that from people. So I think they feel themselves about not wanting to ask for their own money.
Yeah.
So I think as they're all a lot longer than they need to be, and I think as Josie pointed out there, I think they've actually been trained that way. And I think Joan might be, g'day Joan, I think she might be on a bit of the same track, because she's just made a point in here in the chat that says, I think I understand what you mean about designing a sales process for payment, but would you just give me an example so I'm more clear, please? So that'd be for you.
Is that for Josie or for you?
Yeah, for Josie, she's saying.
Yeah, sure. So an example of that would be when, say you've got a service contract that you're signing up a new client to provide a project, and upfront within that contract, yes, you're providing the scope of the services, you're providing the price for those services, but what you should also be doing is actually clarifying the payment terms and the payment expectation within that. So for instance, if it's a longer term contract, you might want to specify some upfront and monthly payments ongoing until the end of the contract, where they can just then finalise the last piece. If it's a shorter term contract, the expectation might be 50-50 or, 50, 25, 25. Yeah. Make that really clear so that when they're signing up straight away, they already have the expectation, this is when I'm going to have to pay. So then you're not taking them by surprise by just sending them a random bill for a progress claim on a project that they don't really understand what it's made up of or why you're sending it at that time for that amount. Because all you're doing is creating uncertainty and questions in the client's mind. It's a roadblock.
Yeah, so not taking people by surprise is a biggie, You got to set it up right in the beginning. Absolutely. That's a good question, Joan. Thank you so much for answering that. I've got another one here from Selena. So Selena's one of our regulars. She comes on board every Wednesday night. And she's saying, I've got money in the bank account. What does profit and loss tell me that my bank balance doesn't?
Okay, yeah. So your bank balance tells you how much money you've received, but what it doesn't tell you is how much of that money you've got to flag, you've got earmarked to pay off your bills or to pay your taxes or to pay those things you haven't paid yet, but technically you've already spent. So your bank balance isn't a good indicator of your profit. It doesn't tell you how successful you are. It just says you've got this money so far, but you could have gotten $1 million in your bank account, but you might have committed to 1.2. So you're actually 200 in the hole. So it doesn't matter whether you look brilliant in your bank account. You can be your business can still be unsuccessful when reality looks at the real numbers that say, well, no, you've still got to pay all of this money. So your bank balance is not a good indicator of your success.
No, but it's a really good, it's good to have positive money in your bank account, right, Phil?
Well, it's better than negative, or, it's not the all end all, yeah.
Because some people, and I'll just go into that, because some people grab overdrafts, or they use their credit cards to fund things. And, that's a little bit of it's a bit of a buffer for people who, of course, everybody needs a little bit of cash flow for trading. You need trading cash flow, right? But do you know what your trading cash flow is? Because, that's where you need Josie or somebody to work out for you how much you really do need per month for trading cash flow. And you shouldn't be spending anything more than that, because if you're spending money for marketing, and this is another number that comes up quite often, what's the cost of marketing? What's your dollar cost of marketing? Because marketing comes out of profit. So you got to make profit to spend on marketing. And Richard Branson says it's always a multiplier of 3. So, you know, if you spend $1 on any form of marketing, you need $3 in profit back. And I'm talking profit back, not turnover, not revenue. So, you know, not a lot of people actually do measure that. Do you measure that, Josie? Do you actually have a look at, do you segregate marketing costs and have a look at, and do you advise people you look after, look, you're spending too much on marketing, you're not getting a return or anything like that? Do you do that level of analysis?
Yes, we do. So we do a lot of work with management accounting reporting, it's called in the biz.
Yep.
But basically what that means is that we are pulling out key indicators. So they're key measurements around your business, and these aren't all the same for every single business, but where we'll get to understand, okay, so this particular type of cost should be a percentage of your revenue, and that helps to measure whether you're on track with that. So you take out these different categories of data that are relevant to your business and how those pieces of data are tracking against your sales, or how your cost is tracking against your sales, marketing, wage costs, different areas, and different businesses have really, you know, some unique things that need to be looked at that can tell them whether they're doing okay in that way, in that area, whether they're spending enough, not enough, whether they could do more. So, you know, we've said to some clients, look, you could really be spending a lot more on marketing to really boost your sales here, because you've got the leeway to do that, you know. And this is probably what we'd recommend as a starting point. So, because you know, some business owners aren't quite sure, how much should I spend, what's really appropriate for my business.
That's right, because I know Chris Dobbins on the line, but he's muted, so he can't talk to us. He's just waving, but he's driving home, which is really great. But you know, one of the questions that Chris asked in his business, and we're going to hear more from Chris next week, because we're highlighting Chris and his expert status around social media marketing. But, you know, one of the questions that Chris asks is, you know, so what's your budget? And most people don't know what they've got to budget for marketing, right? So this is where we need, you know, you need your numbers updated. You need your numbers updated every month. You need to know what sort of profits you're making. You need to understand what it is that where can you spend some profits on these sorts of things. So, yeah, have you got anything you want to add to that, Phil?
Well, I can tell you, if I had some marketing where I was putting $1 in and getting $3 back, I'd be throwing as much money at it as I could. I'd be going to Chris and asking him to lend me some. I wouldn't have a budget. I'd be unlimited. I would put as much as in there as I could.
As long as that you could actually service the work that you were getting. Oh, you'd probably put more team members on then, right?
That's it. Grow.
Grow. And not everyone wants to grow, though. Sorry,
just before you go on to the next thing, I just wanted to go back to something that Josie mentioned earlier, and I've put down a couple of notes here. And there's been a few things that have been spoken about, which I notice people get a bit confused about. And sometimes when people are talking, it's the language of numbers. And I think the language of numbers people could get confused about as well. And early on in the conversation, Josie, you mentioned about talking about numbers to people in a way they understand or in their own type of language. I mean, we've had stuff like sales, margins, expenses, markup, debtors, creditors, wages, benchmarks, ratios, cost of sales, trends, seasonality, sales processes, measure, like all these terms that are coming up. Even Glenis said before, as revenue and turnover, and you know, people can think they're different, but they're the same. So how do you communicate with people about the numbers?
Yeah, so I mean, some of the work that we do is a little bit educational as well, because some things business owners are completely new to, and they need to, you know, there's some pieces of financial language that are really important for a business owner to learn, but we don't try to get too deep into that. But some of the things when I say about communicating is about turning those words into just numbers and visual representations of their business. So rather than it being numbers, it doesn't have to be. It can be visual representations and different, categories. So we categorize all the data, and the data that's categorized has names that are relevant to that business. So if I had a hotel, I'd be talking about their particular departments within their hotel, their housekeeping, their hotel, like the room hire and things like that. So we would talk to them more specifically on the really individual parts of their business and say, well, with this room hire or with this housekeeping, for instance, for a hotel, well, that's really heavy with how much it costs you to pay your staff to do that work. So we need to make sure that we keep that within a reasonable level so that you know that you're not overspending in that area. And so none of the language is necessarily technical when we talk to clients, and you're just talking about their business specifically and they can generally understand that, but also representing that visually. And also changing it from them reading the data themselves to actually having a meeting and talking to them, because some people take things in a lot better by hearing what's going on and by chatting and nutting it out with someone. Some people like to look at the visuals and go through that, and that's what appeals to them. That's what communicates well to them.
Graphs. We love graphs.
Graphs. We love graphs. And
Who doesn't love a pie chart?
Just throw those graphs all over everything.
I think it's the word pie that I love about them.
Yeah. So, and just picking out key numbers, like one number rather than a big range of numbers that people are lost in. Just pick out the really important ones, and the categories and the words that we use are generally just relating directly to their business, so they can be very variable.
So there's one word in numbers that I dislike, and that is budget, because all budget tells me is what I'm not allowed to spend.
Oh,
so
right.
When people say budget, I think negative, negative, negative.
Got
it. A budget is really just a plan, isn't it?
Yep.
And everyone needs a plan.
Yeah.
So a budget is only a reflection of what people plan to do. Would that be right? Rather than a negative, bad thing to happen?
Yeah. Yeah, budget is a pretty ugly word, I must say. It doesn't give people a lot of joy. Your budget is your plan, it's the targets, it's your goals. It's your goals in numbers, basically, is maybe a nicer way to say that. And so, think of it as your goals in numbers, and it doesn't necessarily matter whether you meet your budget or not. It's a measurement. It's not a big red flag if you did or didn't, because you might have exceeded your budget in your marketing spend, but that's because you were making so many sales. It was actually worthwhile because you were making $3 for every one you were spending.
Exactly.
Right. So, so you don't necessarily always know ahead of time, and that intimidates people. I don't know what's going to happen in 1 year's time. How can I possibly set a budget for that and they feel like it's putting a restriction on
a lot of people,
and also putting that ceiling on it to say, well, if I don't make that, I'm failing in my business. But it's a goal, it's a target, but they can be movable, they can be changeable. We even do monthly reforecasting budgets, whereby we do change the numbers and the targets each month depending on certain drivers. So it doesn't have to be scary. It's your goals, and it should be thrilling to see that you meet them or be able to interpret them and measure your success.
It is, and that's great, and that's a great question, Phil. But with budgets, I look at budgets as the upper limit I can spend. Like in the expense area, I look at it as the upper limit I can spend, unless I exceed my sales budget. So if I exceed my sales budget, then I can spend more in the expense budget. So it's sort of, to me, I actually like it because it gives me some guidance. And that could be because I'm a bit of I like numbers person. But it gives me the guidance to know that if I stick to those expense budgets, then I know I'm not going to get into trouble. Okay. But in business, with me, I'm always looking at the top line for people. Like I'm always going, so how can we get that top line up higher and higher, right? And the profits up higher. So I don't necessarily want you to do more sales and have less profit. It's more, you got to get your sales up and your profits up, right? And they're the trends that I like seeing. But Josie, tell us a good story. Tell us a really good story about a client of yours where you've done this with them and what have they succeeded in?
Okay, yeah, so a really good story, particularly where we've used these different types of visual reports to highlight this to a client that was really just not getting the message before. So, you know, we have this client that's running a hotel with a boutique restaurant within the hotel. Yep. And they were just doing phenomenal. So on the surface, they look extremely successful. The hotel is fully booked all the time. The restaurant is fully booked 98% for their, you know, sort of evening, you know, main trading times. But they were finding they were still having issues making profit and cash flow. And so with the reporting and budgeting that we did set some rules around some of the wage costs, which, you know, were hurting them somewhere because they were trying to deliver such a high service, but they were kind of just, they needed to balance that out. So it showed them operationally how they could balance out their costs where it was hurting them without losing too much service levels, you know, where you've got to strike a balance between that. But the biggest thing it highlighted was that the restaurant in particular wasn't making any money. The hotel was doing stunningly, and as long as they stick to their budgets on the costs lines, they were fine. But the restaurant was doing poorly despite it being fully booked, you know, all the time, and they think it's so successful, and it was a wonderful place to go, neat. But what we did was analyse the different days of the week and really jumped into the nitty-gritty on those numbers and pull out the analysis. And what we found was that the restaurant was open pretty much all the time because they were trying to service breakfast, lunch and dinner and dessert because it was a dessert restaurant. And what that meant was that but breakfast, nobody was really doing breakfast. You know, it was just included with the hotel, but they were still paying high-level staff and doing all of that. And same as lunch, because they were in the heart of a city area where there was tons of restaurants to compete with for those different categories, and their restaurants specialised in evening dessert. So it gave them the opportunity to understand how operationally they could adjust their timeframes within the restaurant.
Yeah.
And instead we sort of came to the sort of conclusion that they could actually just do some joint venture little sort of cross promoting with the local cafes and restaurants and start providing little coupons and things so that their guests could actually go to the local restaurants, which is where they wanted to be anyway, because it was part of the appeal of the area. So that turned it right around, and, you know, and just keep the profitable parts and drop the unprofitable parts.
The unprofitable, that's great. Or I've got some really great strategies on how to get, you know, your prices up in a restaurant, and, you know, how you can, just through doing desserts and entrees and a lot of reciprocity. But I've got a question in here from Anna for you, Josie. What is a great system that businesses could use that is simply easy? It is simple and easy to understand by any small business before they come to you. So thank you, Anna. Thank you for dropping in that question, and Josie's going to answer that. Did you get that, Josie?
So was that a software system? Was that the question?
Yeah, I think that's a great system. So I think it's software system. Simple and easy to use, understand by any small business owner before they can come to you. So what's the step they can need to do? Yeah.
So, so beforehand, if you want to DIY your accounts and get that going for when you're starting out, it is still worth investing in a cloud based sort of accounting software. Quite a few of them now are quite simple to get started. I mean, we always recommend Xero accounting software. That's Xero. It's probably a little bit more expensive than a few of the others, but it's well worth it. There's a lot more checking within the system on your own work so you can make fewer mistakes, which is what we find is a really good advantage with that product.
Yep. So Xero is good.
Xero.
You got any?
Xero.com. And you can, start on that, and it's, the subscription, you pay a monthly sort of service, but if you need to stop using it, you can stop any time, but they save your data for 7 years. So you really don't have to worry at all.
That's really good.
So that's what I would recommend for starting out and going forward. We use that software on even large enterprises. So it's suitable for a fair range of businesses.
Pretty robust. That's really good. Now, Anna says, great, thanks. That's awesome. So, Phil, have you got another? I know there's another couple of questions in there before we wrap up tonight. There's something in there from you?
I can't see any.
Okay. I think there was something in there from, I think it was Aaron. Aaron's asking a question about, he's been doing his DIY accounts. He manages it okay. He doesn't run on a budget. Is that all right? Like, he's making profit. He's saying he's making profit. Good on you, Aaron. He's making profit. He doesn't have a budget. Should he have a budget? Why does he need a budget?
Is this for me or Phil?
You, Josie.
Oh, for me. Sorry. Yeah. So, look, you can run a business without a budget. A budget is probably for when you really want to meet some goals. So if you're starting your business and you kind of just letting it go, I mean, people do it that way, that's fine. That's a way to go about business. And if it's working, it's working. But what a budget does for you is says, I actually want to reach for a goal. Here's my target. Did I get there or not? Because if you didn't set that goal in the first place, how would you measure whether you got there or not?
Yeah.
So and it also says you go, well, I actually don't want to spend any more than 20% of my sales on this particular type of expense. And if you're looking at that budget month by month, you can check to make sure that you keep under that, so you're not overspending somewhere you don't want to, that's not really giving you that much benefit in the business. Particularly as you scale up, if you start to hire managers and have a larger team, you start to get to the point where you might actually pass some of the,
responsibility on them.
Responsibility to a staff member. You want to make sure that you are really clear about how much that you want them to spend,
absolutely.
That's another area it becomes really important. But even for your own self-discipline and measuring and tracking is really helpful to be able to reach your goals rather than just randomly hoping you get there.
Yeah, good. That's a good question. And Aaron has got, yes, he's okay with that. That's just great. So, Phil, have you got any final questions or any wrap up before I wrap up finally for tonight and we shut down the drive home?
Well, I think the key message that I've got out of it is I need to focus on my numbers, because what I focus on improves. And the word measures come up. So for me, the numbers are like my scoreboard. So I might be tuning in to watch the Ashes tonight. I'm going to get the score update every ball. I'm going to know exactly what's going on in that game, and it makes the game more interesting. If I go to the footy, I'm going to know exactly what the score is all the time. It wouldn't be too much fun if I got there at the end of the game and they said, now we'll just update you in 2 weeks. We'll update you and give you the result, and we'll go back and rehash it all. Need to know what the score is all the time, so it's more fun.
Yeah, good. Numbers are fun. I love it. I love that correlation. That's great, Phil.
That's a great analogy. I love that.
I love it too. So recapping, we've just been talking with Josie from Solpoint tonight and Felice from Profit Improvers. And we've been talking numbers, and we're talking about the types of numbers that you need to measure as a small business owner to help you achieve the goals that you want to achieve. And those sorts of numbers are things like sales, cost of sales, your wages, your overheads. But also we want you to have a look at doing a budget. And budget's a good thing. Budget's going to help you stay in the red. It's not going to have you be in the hole. As Josie said, we don't want you to be in the hole. So that's what we all learned tonight. Josie, you're a wealth of information around for small businesses, around helping them get on board, get a system, you know, using Xero to actually help them get digital, getting reports out that are meaningful to help them grow their business. And also you help people ensure that they get paid for what they do, because cash is king in a business, right? If you haven't got cash, you can't do much. So I want to thank you. Yeah, I want to thank you for being on the show tonight. I want to thank Phil, our resident panelist tonight, for bringing and sharing his knowledge and wisdom around numbers, and then actually sharing with us his analogy about how numbers are fun. I love it, Phil. And also Referrals Over Breakfast for hosting this event, and the RoB Academy. If you don't know what the RoB Academy is, it's an academy which has got lots of knowledge around business to help you grow your business and scale up. And so if you want to know anything about that, just go on to referralsoverbreakfast.com and have a look at that. But also you can join us on our public Facebook group, and you can hear all the latest goss and meet some more people in business. So next week, I know we're going to be wrapping up because it's just after 6 o'clock now. Next week, we're going to be talking with Chris Dobbin. Chris is a social media expert, I would say he is, and he's going to have all the latest goss on, I believe, you know, LinkedIn, Facebook, Instagram, all the little the things that we need to know in business of where to put our marketing dollars to get 3 times. Okay. So this is Glenis Gassmann from More Customers, More Profits, and I'm wishing you all a great week in business. And we'll hear from you again on the drive home. Phil, you got any last words of wisdom to say? And Josie?
Oh, just keep striving and measuring and just doing amazing businesses.
Fantastic.
You're all fantastic and you're doing a great job.
Great. Thanks, Josie. What about you, Phil?
Put up a scoreboard. Put up a scoreboard in your business. Put one up with your favourite numbers and keep a track of it.
Fantastic. Awesome. All right, everyone. Have a great week, and we'll talk to you again next week.
Awesome. Bye.
Bye-bye.